Okay, and now let's shift our attention, our conversation to Karnataka Bank, and let's bring the stock on the screen. Despite delivering strong fourth quarter earnings, the Karnataka Bank is seeing a cut of over 3% in the trade. Now, if you take a look at the earnings at present, what the company delivered was net profit increased by almost 5 to 6 times. Net NI again, net interest income, that was down 11%, and that's the first sign again that the operational sort of a weak number again on the NI front here. If you take a look at gross NPAs, those declined marginally, 4.41% versus 4.45 last quarter. Marginal improvement, net NPA marginal improvement, provisions were down 60%, and capital adequacy ratio again was still looking good. So the net profit again got a boost again from the sort of other sources of income here. But NI is something perhaps the street is taking note of, and the stock is down almost 6% now. The cuts have increased further. So we are talking about a good sort of volumes led selling which is happening. So what happened during the quarter? Let's try and understand from the management. The MD and CEO, Mahabaleshwar MS is now joining us. Sir, good morning and welcome. First question to you. Before I take a holistic look, holistic answer from you on the fourth quarter, why NI was down again sharply, almost 11% decline in the fourth quarter?
Yeah, see, in spite of lower NII, bank has been able to come out with a strong bottom line. I think you might have already noted it. So there is a significant jump in profit as well as moderation of NPS. So we will discuss that later. As rightly pointed out by you, as far as NII is concerned, so in two areas, that means the operating profit itself, the interest on IT refund. Last year we had about 98.41 crores, which was one-off item, whereas this year it was just 17.21 crores. So to that extent, that means the operating profit was pulled down by 81 crores on account of this. Similarly, in the profit on sale of investment, last year we had about 197.52 crores. This year it is only 153.25 crores. That is down by 34.27 crores. And in the expenditure side, provision for salary arrears. Last year, you are aware that the negotiation with IBA is going on. So last year, we had made a provision of 13 crores, whereas this year, the provision for the full year is around 61.38 crores. That means the increase itself is around 48 crores. And added to that, interest on subordinated debt, that also around 30 crores additional expenditure is there through the current year. So that is why which has pulled down the NII. But nevertheless, on account of this, there is a significant reduction in the slippage also, and also NPA provision. Last year for the full year we had made about 1080.42 crores, whereas the current year NPA provision is 763.56 crores. And if you look at the slippage also, last year our NPA slippage during the current quarter was 0.80%. This year it is 0.80%, whereas the corresponding last year quarter it was 2.88%. For the full year, last year it was 5.89%, current year 3.16%. So slippage has considerably come down. So also the credit cost. Current year my credit cost is 0.40%. Whereas last year corresponding quarter it was 1.25%. Current year full year credit cost was 1.39%, whereas last year 2.29%. So as I said, there is a very significant jump in the net profit, which has grown by on year-on-year basis by 40.57%.
Absolutely. So point taken, sir. Sure, sir. Yeah. As you're just explaining, also want to ask you on three important trends. One is deposit growth, credit growth, again 2 points, and the third is pre-provisioning operating profit trend. How you are actually, what's your sort of view from March quarter now again, how we are going to progress towards the next 2-3 quarters? How's the underlying trend looking like on all the three important parameters I just talked about?
Yeah. See, as far as the deposit is concerned, we grew at a rate of around 9%, 8.88% during the current year. And for the next year, we have planned a growth of around 16%. Because we have been focusing more on CASA. During the current year also, our CASA has slightly improved to 28.06%. Last year, it was at 27.98%. So going forward in about 2 to 3 years, we are planning it to take it to a level of minimum 30%. So that is the deposit growth wherein we will be focusing more on CASA. And added to that is the cost of deposit also. We have been able to manage it very well because last year our cost of deposit was 6.06% and the current year it has come down to 5.96%. As far as the advances is concerned, this year our growth is 16.03%, and for the current year, that is 2019-20, we have planned for a 17% plus growth in advances. So overall, our present turnover, which is at 1,23,280 crores, we have planned to take it to a level of 1,44,000 crores. And another significant thing is our CD ratio. It is now at 80%. So that is 80.10%. So the credit growth as well as the deposit growth especially in the low cost deposit, it would continue. And in addition to that, our focus on improving the asset quality would be getting further impetus from all corners.
So one interesting point, I'm just picking from your answer, 17% credit growth expectation. I think the investors will like to know which verticals are showing that promise, where actually you are seeing, and because 17% definitely is a good number. So which verticals perhaps can help you to achieve the 17 to 18% credit growth?
Yeah. See, I think you may be aware that we are into our transformation journey in association with the BCG. So the year 2018-19 was our first full year of transformation. So in that, from that angle, we have been focusing more on the housing and MSME advances. Especially last year, my housing loan growth was 25.36%. And the lease and encash type of advances grew by 28.09%. And loan against property, basically this type of loans are taken by the MSME borrowers. This is at 12.01%. And similarly, the equipment finance to contractors also saw a significant growth of 43.72%. And the agro processing, again, which either comes under the agricultural advances or the MSME advances, this has recorded a growth of 36.34%. And there was some good demand for the agricultural gold loan also, which has recorded 10.35% growth. So all these areas would continue to be our priority area. That means the retail and MSMEs would continue to be the priority area for the current year.
Sure, sir.
And we have already started the journey digitization for all these under our IT transformation initiative.
Sure, sir. Definitely, again, a lot of promise for the next year. Though the stock perhaps has given a negative reaction today, but as you're explaining, 17% credit growth, I think I would take that as a sort of silver line number for the investors, is something again which is looking as a growth parameter for FY20. Mr. Mahawalesh MS, thanks a lot for joining on the show and giving us insights into how we should interpret the fourth quarter and FY20. How's it looking like? So that was Karnataka Bank management. The stock today again has declined, but again, as the management is saying, asset quality under control, more growth visibility is something I think which investors now can expect. So from banking, now let's move on to automotive.